What's up, everybody? This is Sunko, the Korean bro. Today is 2023, January 9th. And let's look at stock market, okay? Let's see. What kind of articles do we have tonight? Two top stocks in Warren Buffett's secret portfolio to buy now and hold forever. Silvergate Capital to cut 40% of its workforce. Is this the end of the crypto bank? Okay, three stocks to avoid this week. The Roku stock is down 90% from its high. Time to buy. Three reasons to avoid Warner Bros. Discovery stock in 2023. One bargain basement Warren Buffett stock down 83% to buy before it starts soaring. This may be the longest bear market in history. Three ultra high yield dividend stocks. There are three screen buys in 2023. And nervous about the stock market. Here's Warren Buffett's investing advice. Adding $500 to these two stocks will be a genius move right now. Okay, first things first, Silvergate, okay? Silvergate Capital, 240% off its workforce. This is the end of for the crypto bank. Despite deposit at the bank fell from close to $12 billion at the end of the third quarter to $3.8 billion at the end of the fourth quarter, Silvergate then had to sell bonds at loss to cover deposit outflows, wiping out a substantial amount of tangible book value. The prospects for the bank are now green, especially with crypto struggling. Okay. The bank provided a preliminary update on the fourth quarter earnings. It wasn't good. Crypto bank Silvergate Capital followed up a recent short squeeze with a preliminary update on its fourth quarter earnings results that sent the stock in the exact opposite direction, plunging to near all-time lows. Silvergate announced significant deposit outflows in the quarter, big charges from selling bonds, and that it plans to lay off 40% of its workforce. With the crypto market currently experiencing an intense crypto winter and the bank's outlook bleak, is this the end for Silvergate? Intense deposit outflows. Silvergate Capital is a bank regulated by the Federal Deposit Insurance Corporation. But it's quite different from your traditional lender. Silvergate built a payment network called the Silvergate Exchange Network that enables two parties on the platform to transact US dollars in real time. Silvergate doesn't hold any cryptocurrencies on its balance sheet, but SCN is helpful for crypto traders and exchange because the US banking system doesn't operate in real time, and cryptocurrencies trades around the clock. Silvergate allowed crypto exchanges and institutional crypto traders to use SCN for free because these parties will bring large sums of non-interest bearing deposits to the bank. This served as essentially a free source of funding Silvergate could deploy into bonds or loans and make money on the spread. Destroying book value. Silvergate maintains an extremely liquid balance sheet, not taking on a lot of credit exposure, but mostly investing in government-backed bonds. The problem is most bonds are underwater due to soaring interest rates. And Silvergate had to convert many of its bonds to cash in order to cover deposit outflows, which forced the bank to sell bonds at big losses. Is this the end? I've owned Silvergate for a while now, and for much of the time have been quite bullish on the stock, as the bank does seemingly provide critical infrastructure to the sector. So I'm obviously quite disappointed. The recent update from management was worse than I had expected, particularly on the deposit outflows. The outlook for crypto is quite grim, and I'm not sure how long it will take for the industry to rebound and for the FTX situation to resolve itself. Silvergate might also face regulatory charges or fines due to its business dealings with FTX. Only time will tell. On a more positive note, the bank did see about 68% of its deposit leave the bank in quarter fourth, leave to tell the tale. So that's something. Also, if crypto rebounds, Silvergate and CN could as well, given the service it provides. But with so much uncertainty in the environment, so many other variables, I would not recommend buying the stock right now. Okay, anyway, this author points out that he doesn't want to buy this Silvergate right now. Considering the green situation that cryptocurrency industry goes through, he says he will not buy it. Roku stock is down 90% from its high. Time to buy. Okay. Okay, let's see. Despite a huge drop in price, the shares still seem risky right now. The good news is Roku's platform is still growing. Roku added 2.3 million new accounts just this past quarter. 2022 could hardly have been worse for Roku's stock investors. The streaming video platform shed over 80% of its value, compared to a roughly 20% drop in the S&P 500. Mm. Shares are down over 90% from their all-time high in May 2021. Declines of that magnitude usually mean that the business has lost significant earnings power and isn't just going through a temporary growth slowdown. Uh, with that major risk in mind, let's take a closer look at whether the stock is worth adding to your portfolio right now. The bad news. Um, what bad news we have with this Roku? Okay, let's start with the bad news, which isn't trivial around Roku's business. Revenue growth from its core streaming platform has slowed to just 12% in the most recent quarter. Mm. And management is projecting declines in the final quarter of 2022. The main culprit here is collapsing advertising spending for digital TV ads. The industry shrank by 17% in the second quarter and by 38% in quarter three, thanks to shrinking marketing spending around what could be a recession developing in 2023. So, uh, digital uh, advertising spending for digital TV ads shrank, right? What could be a recession because of a recession, it shrank. Roku said in a letter to shareholders in early November they expect these declines to continue until at least next year. Because of Roku's reliance on the ad market, this turn of events has had a brutal impact on earnings. Net income was $290 million in the first 9 months of 2021. Mm. But the company lost $261 million in the same period of 2022. Okay. Because of Roku's reliance on the ad market. So this industry relies heavily on ad market, and because of Corona and because of recession, uh, ad spending shrank, and their shrinkage mm, has made the outlook for this company small. Anyway, then income was at $290 million in the first 9 months of 2021, but the company lost $261 million in the same period of 2022. Hmm. The pace of losses is likely to worsen to before results start improving. Okay. Anyway, shrinkage of digital spending, shrinkage of ad spending, has made uh, Roku. Uh, well, that's the bad news, but we have also good news here. The good news is that Roku's platform is still growing. It's still growing, though. Hmm. Okay, digital spending and ad spending shrink, but then its user is growing. Roku's platform is still growing, having added 2.3 million new accounts this past quarter. Engagement is strong too, with streaming hours rising by 1.1 billion to 21.9 billion. Success here gives Roku a great foundation it can rely on as it adds value to its service for users and for advertisers. And that value is what will likely determine the company's big picture earnings potential, regardless of temporary slumps like recessions. Value is what will likely determine the company's big picture earnings potential, regardless of temporary slumps like recession. Economic cycles do not change our significant long term opportunity in TV streaming. Economic cycles do not change our significant long term opportunity in TV streaming, management said. The executive team is also busy diversifying Roku's business so that it isn't so sensitive to shifts in the ad market in future years. So, mm, so the executive team also tries to do a lot of things. They are trying to do a variety of things, um, various things, so that um, they don't only solely focus on ad market. There are many good options ahead on this score, including Roku's own content subscriptions and hardware sales. Wait and see. But it makes sense for investors to watch this stock for at least another quarter or so to see whether Roku can show a clear path back towards profitability. The current business model isn't achieving that goal, and that's good reason for its stock's decline in 2022. So this author thinks the main reason for decline was that mm, its uh, main growth power uh, has lost power, which is uh, uh, ad digital ad industry. Uh, but the good thing is it's still growing, and a lot more users are coming. And executive team also tries to find um, various business so that they can shift from digital market to somewhere else. And so the other things we what we have to do is just wait and see. The current business model isn't achieving that goal, and that's good reason for the stock's decline in 2022. The shares might seem cheap at a fraction of the price investors paid for the stock back in late 2022, but there are other more attractive options in the streaming video space like Netflix. So there are a lot of obstacles. Like they have a competitor, uh, Netflix in this case. Netflix. Uh, the streaming video leader is projecting accelerating user growth into 2023 and remains highly profitable. Mm. Roku stock doesn't look like a clear buy right now, at least until the business gets on a similarly positive growth path. Mm. Okay. Oh, and next one we have is okay, let's read this one. This may be the longest bear market in history. Stock market corrections are commonplace and usually reach their nadir within 10 months. Nadir within 10 months. If the current bear market follows the pattern of other Federal Reserve rate easing cycles this century, we're still a long way from the bottom. There are a number of smart ways to invest during a lengthy bear market. Hmm. The longest bear market in record lasted 929 calendar days, but the current bear market may top it. Last year proved to be one of the most challenging on record for investors. When we officially turned the page, the ageless Dow Jones Industrial Average widely followed S&P 500 and Tech Depend and Nasdaq Composite respectively fell by 9%, 19%, 33%. All three indexes spent at least some of 2022 entrenched in a bear market. However, a new year brings new hope that brighter days are ahead for Wall Street. Unfortunately, history and hope are at odds with each other. Most stock market corrections are resolved in last year. Hmm. While you might not realize it, stock market corrections decline of at least 10% from a recent high are fairly common. Since the beginning of 1950, the S&P 500 has undergone 39 separate corrections, according to data from sell-side consultancy firm Yards and Knee Research. The vast majority of these declines doesn't take long to find their respective bottoms, not including the 2022 bear market. 24 of the previous 38 corrections since 1950 reached their troughs in 104 or fewer calendar days. Another 7 corrections took between 157 calendar days and 288 calendar days resolve. In other words, in all but 7 corrections in a 73-year time span, a stock market decline has taken longer than 10 months to reach its bottom. As of the closing bell on January 4th, 2023, the S&P 500 has spent 282 calendar days in a bear market. Per Yardney, we're just a few days away from entering rarefied territory when it comes to the length of the existing decline. Okay, let's get to the bottom. So the point of this article is that this bear market has never it's the kind of bear market we've never experienced before, and most likely market hits bottom and then it comes back, and rebounds happen within a year, but then it's not likely happen it's not going to it's not likely going to happen this time. So this will probably be the longest bear market ever in history. Anyway, 3 smart ways to invest during the lengthy bear markets. Well, this probably isn't the projection you want to hear. It doesn't have to be terrible news either. Bear markets have historically been an excellent time to put money to work and have all investors buy into time-tested business at significant discounts. One of the smartest moves investors can make during a lengthy bear market is to buy dividend stocks. Publicly traded companies that pay a dividend are usually profitable on a recurring basis and have successfully navigated their way through previous economic downturns. What's more, dividend stocks have outperformed non payers by a significant amount over long periods. In short, they're just the type of business you should want to own when uncertainty is prevalent. So, dividend is key here. And second and third option that they provide is here investing in defense sectors and industries can be a genius move too. For example, electronic utilities are a solid bet to outperform during a bear market due to their highly predictable cash flow. Homeowners and renters don't change their electricity consumption habits much from year to year. Furthermore, most electric utilities operate as monopolies or duopolies, which leaves little choice for consumers. So the point he makes is that uh, consumer staple uh, is a sector that you can invest when recession comes. So like the one that we use on a daily basis, things like electronic devices, uh, electric utilities, shampoo, or things like that. We use that on a daily basis, right? Mm. There's the second option when recession comes, and third one is the third smart move during lengthy bear market is to consider buying exchange traded funds (ETFs). Buying ETFs allow investors to instantly diversify or concentrate their investments at the click of a button. With an ETF for pretty much every sector, industry, trend, region, and market cap, investors have an abundance of ways to put their money to work over the long run without necessarily having to worry about single stock risk. Hmm. Huh. So here it is. Buying ETFs allow investors to instantly diversify or concentrate their investment at the click of a button. With an ETF for pretty much every sector, industry, trend, region, and market cap, investors have an abundance of ways to put their money to work over the long run without necessarily having to worry about single stock risk. So by buying a ETF, it's less risky, right? So to summarize, dividend stock and staple consumer staple stock and ETF. These three are the options that this author provides. Hmm. Okay, then the key point here is that continuing to invest even during potentially lengthy bear market is a wise decision for long-term minded investors. Okay. Okay, this is it for today. I'm gonna have to do something, so this is it, and I'll see you guys tomorrow or the day after tomorrow. Okay. Bye bye.